So hello guys and welcome back to the channel. Rahul here from FinTax. So today we are going to discuss about why it is important to invest in equity and why we emphasize on investing in equity rather than investing in other instruments such as bonds, fixed deposits, mutual funds, etc. So we'll be discussing the benefits of investing in equity. So I will divide the benefits in two major categories. One is monetary benefit and the other is non-monetary benefit. So monetary benefits are basically of two types. First one is dividend. So dividend is basically the return or extra amount of money that the company gives to its shareholder as a reward. So basically dividend is given usually when the company is performing very well, its sales is good, turnover is high, and basically company is financially in a very strong position. So dividend is given then only, and mostly dividend is given by those companies which do not have much growth prospectus in the future, as they don't need to invest that money in their company for expansion or growth anymore, such as basic companies like Pepsodent, Colgate. They are very famous for giving dividends, basically FMCG companies. So next we are going to talk about capital appreciation. So capital appreciation is basically really increase in your capital investment in the share. So when you invest in a share, that share does not give you dividend, but it basically the amount of dividend is reinvested in the company so that they can expand and grow, and the value. So ultimately when the company will perform very well and it will have a good market share, so eventually the share of the company will increase and price will increase, so that will give you capital appreciation. For example, you can say that such as companies such as Reliance and Maruti Suzuki, they don't give much dividend, but they reinvest the profits which they earn every year and for expansion. So the price, the capital increases very high. So these were the two monetary benefits, and now we'll come to non-monetary benefits. First of all, we'll discuss about bonus share. So bonus shares are basically when there is an increase in quantity of your shares and your capital remains the same. So you can take an example of bonus shares, and just when I started trading and when I started investing 2 years ago, when I just passed out of my college. So at that time I invested in Jubilant Food. So I purchased just 10 shares for around 750, and that share went to around 1400, and then Jubilant gave a bonus, 1:1 bonus, and then I got 20 shares for 1400. So I got a pretty good deal on that share. So that was my one of the first shares, and that was very satisfying for me. So in bonus share your quantity increases but capital remains the same, and when usually at the level where bonus is issued, the price gets half of that. So for example, that if the price of one share is 10 rupees and 1:1 bonus is issued, so you were having one share of 10 rupees, now you will having two shares of 5 rupees. So that's the case in that. The next thing we will talk about is right issue. So right issue is nothing but a right given to existing shareholders by the company to buy its shares. Company, rather than issuing the shares to public directly, gives let the shareholders use their right to invest in the company. So in this case the all existing shareholders have an upper hand, or you can say have an advantage of investing in that company rather than have an edge over the retail market. So in right issue, it is very helpful for maintaining a level of control on the company, and it is very helpful if the company don't want to accumulate very large number of shareholder base for their shareholders. So it is very helpful to maintain a proper amount of control over the company, and basically contract the decision making powers. So these are the benefits of investing in equity, but as equity possesses a lot of risks such as market risk, inflation risk, etc. So you have to manage and look at all those risks before investing into equity. So we will talking about this risk in our later videos. So thanks for watching guys, and stay safe.